Hello guys and welcome to this week's market breakdown. My name is Duman Kolani and today we're going to be looking at gold and EURJPY. So let's not waste any time. We're in an uptrend, right? It's very clear. We were on this downtrend, broken the neckline, started printing higher highs and higher lows. So obviously through this we can already decide, or it's already given that we should be looking for buys. So the areas that we should be looking at buys are this support over here, support over here, or we should wait for a breakout from this resistance over here, right, and retest as support. Upon retesting, we should also wait for confirmation in the form of candlestick patterns, right? So right now you can see that the market is stuck to these two levels over here, meaning that there's a greater significance area over here that the market needs to break before we do anything, right? So say for instance we get to these levels over here, but then the market does not give us the confirmation that we're looking for. We will only sell if we break below this over here, right? So unless we break below this level with a strong ERC candlestick, we're not selling, right? So let's go to lower time frames. You see it's much more clearer here because you have a channel which has recently retested this trend line resistance over here, and now we're failing to break above this resistance, horizontal resistance. So do not sell. I wouldn't sell because we're in an uptrend. I'd rather wait for the market to hit my levels, right? And then I'll trade after it hits my levels. What I think the market will do, I think the market will sell to this point and then we'll buy. If we do get a breakout and retest and bullish momentum, there's a possibility that the market will find resistance on this trend line. So I'm not going to buy unless we break above this trend line and retest this trend line as support. So yeah, that's my sentiment on gold. Moving on to EURJPY. Okay. So we were in an uptrend and we recently broke structure, right? After breaking structure, we got this consolidation. And I always say, these two things. I always say that a consolidation represents equal amounts of buyers and sellers. The consolidation is not a correction, right? So, which will explain why we got this strong momentum to the upside. Let me finish here. Which will explain why after getting the strong push to the downside, we got a push to the upside, because anything can happen when you're in the consolidation stage, right? So, okay, we were in an uptrend. Clearly, the market came down from this major resistance with a strong push, breaking previous structure, right? After that previous structure, we got a reversal or an exhaustion, and then we retested this. So this is a failure pullback, of which I talk about in my latest video. Sure, we got a push to the downside, but then failed to break this low, failed to break below, and now the market reversed with a strong bullish momentum. So let me remove this. Okay, sharp. Because of this retest, we could expect sell-offs, but then I don't want us to focus on that. I want us to focus on this region over here, because that's the level that the market is approaching. So the market is approaching this resistance over here. If it breaks above, then it means that this bullish trend prior to this breakout will continue. Then if it fails to break above and we get bearish confirmation, it means that we're going to take profits below. So let's wait for that confirmation. Also, we could also consider this trend line over here. And we could say that it's a third touch to this trend line. So we're not going to act on this trend line unless we get bearish confirmation in the form of a bearish engulfing candlestick, right? And still, if we do get that confirmation, we sell into the downside. But then if it breaks above this trend line, do not buy. Do not buy unless you break above this area over here. That's all I have for you today. Updates will be posted. And yeah, thank you guys for tuning in. Till we meet again next time. Peace.